Ramnias is saying, Dean, would you consider yesterday's development on Bank Nifty better than Nifty because of D shape? Let us check, compare the profiles for Nifty and Bank Nifty. Nifty was a definite D shape. Bank Nifty was a normal distribution. Now you're asking which one is better. See, again, where is this thing happening is more important, right? So this is the range. This is the normal distribution that is happening. It's happening inside the range. I am not too bothered about what it means, all right? Looking at Nifty again, a range. Now what I'll tell you what is happening here. Okay, what is happening here is that now you're looking at this D shape and you're looking at this breakout, and now you're correlating these two things. What if this would have come back down? Then you would be thinking that, okay, if there is a breakout and a D shape forms, it's a false breakout, market comes back down. Basically what you are trying to do, you are trying to fix patterns in your mind. Does not matter. Why both developments does not matter? Because they are happening where? Inside a range. And what I have said about range, 100 different things will happen inside the range and they will only mislead you. It does not help. So now that we have a breakout, it is not because there was a D shape. Okay, it's coincidental. What can be happening is a bigger balance ended and now we are getting a move away from it. It is not going to develop like this always. There might be a P shape involved, there might be a straight trend day involved, 100 different ways this can develop. Don't try to fix patterns in your mind. It does not matter whether this D is better or the normal distribution in Bank Nifty is better. Nothing is better because everything is happening inside the range. Now we close at the edge of the range. There is always a few traders trying to play BTST and trying to buy here for a gap up open and then selling into the strength next day. All those things will keep happening. But are you trying to do that? That is the most important question. See, if you are trying to play BTST, STBT, all those kinds of things, there is a way to do it. What I'm trying to share here is not that. I'm not trying to share BTST opportunities with you. What I'm trying to share here is that if this breakout sustains, okay, you can look for bullish credit spreads. Okay, that is the basic premise that we are analyzing the market from, getting consistent income. Now, what are we using for consistent income? We are using credit spread strategy. Can we use some other strategy to get consistent income? Definitely. Do I prefer other strategies to get consistent income? No, I prefer credit spreads. Okay, that's my way of trading. You can trade any way you like. It's just not compulsory for you to just follow my footsteps 100% of the time. No, you can select your own strategy. So my objective is to analyze the market in terms of trying to establish credit spreads. Now that we are kind of seeing a breakout, if we start seeing range extensions, we can look for a credit spread. We can go far away from the current market price and we can establish a credit spread. This absorption of supply will support the prices on Nifty if it comes back down. Bank Nifty is a little tricky, so I'm not very keen on Bank Nifty, but Nifty looks good. So you can establish credit spreads here. You can make some money out of it. That is what I am trying to find out. This can turn into a full-fledged breakout, and then someone establishing a bullish debit spread here, okay, right here, and then market moves nicely, and he makes ton of money, and then he posts a social media post that I made this much money and this is the best strategy in the world. Yes, when the market moves sharply, and you can do that. You can even establish a bullish credit spread and use the small profits from bullish credit spread to finance your bullish debit spread and make accelerated returns. And this is the catapult strategy that we talk about. So my point is, you first need to find out your objective, then you find a strategy, then you define your constraints, and then you look for execution. So how will you execute? Whether you're establishing credit spreads, consistent income. Whether you are establishing only debit spreads, you're looking for quick capital appreciation. If you are combining these two, then you're looking for consistent income first, and then if situation is supportive, you're looking to get some quick returns, and that will give you some additional profit potential from your trading. So objective, strategy, constraints, execution. This is the correct way to trade, all right, this particular framework. And if you do that, I think you'll be in much better position rather than trying to memorize patterns and then trying to take trades based on that.